Welcome back to Coinscrum Markets. I'm your host, Teana Baker-Taylor, and I'm delighted today to be joined by Ben Grigus, Director of Product at FalconX. Hi, Ben. Thanks for joining us.
Hi, Tina. Thank you so much for having me.
It's great to have you, and welcome back to FalconX. So there's been a surge in trading interest from traditional financial institutions over the last couple of weeks. In your view, Ben, what's causing this? Is this just, a chase for yield, or, are there other market factors that are impacting this?
Yeah, Tina, it's been really exciting to see the excitement build. I think one of the things that we're most excited about at FalconX, having gotten the opportunity to meet a lot of our clients in person in Miami the past week or two, has been the excitement that exists around cryptocurrency and, more specifically BTC, ETH, and some of the more notable alts. I think that, certainly we've seen a little bit of consolidation. What I would like to think is a healthy consolidation given the run-up that we've had early in the year. We're starting to see some of our larger institutional clients, be it traditional asset managers, and some of the larger crypto native hedge funds, begin to step back into the market and take longer term bullish positions, both in BTC as well as those altcoins.
Cool. So it looks like ETH is getting ready to break the resistance it had at $2,700, but seems to be being maybe pulled back still by BTC dominance. Where is this coming from? What can we extract from that data?
Yes, I think ETH has been a really interesting story, specifically over the past week or so. I think, we had some really interesting comments from Goldman Sachs about the potential of introducing ETH derivatives. And I think, more and more, I think one of the things that we're hearing from our institutional clients is that they're excited about the value proposition of ETH more broadly. I think what we're seeing in terms of that convergence, certainly it does seem as though ETH is primed for a breakup. Or breakouts. But, I think, one of the things that, if you look at where BTC dominance was, 2 or 3 weeks back, I think, to have some natural convergence back toward, a little bit more dominance there makes sense. But I do think the narrative for both BTC and ETH, cautiously optimistically, is very bullish over the coming weeks and months.
Awesome. And you mentioned that we've seen, surge across some notable alts, especially in the last circa 72 hours. What are those alts, and what do you think is driving that? Is it driven by DeFi?
So I think there's certainly excitement around DeFi more broadly. I think one of the things and one of the themes that I was hearing from a lot of the traditional financial asset managers, both in Miami and then thereafter, was that people are excited about the convexity of owning some of these different altcoins. So I think, obviously there is a tremendous opportunity to purchase BTC and to own it. And I think the forecast for that is extremely strong over the longer term. But I do think that people are seeing, not only potential incredible use cases for some of these DeFi tokens, but also there's interest from a convexity point of view, where clients are looking at these alternative coins and seeing the possibility for much larger returns in the months ahead.
Okay. And so, let's just bring it up. It sounds like, Elon is maybe changing his tune again, and that Tesla will resume accepting Bitcoin for payment once Bitcoin's power-hungry miners go halfway green. Well, how has the market reacted to that news?
So I think, we certainly saw a bit of a jump on Sunday in the price of Bitcoin. I think one of the things that's, more important, rather than, at least in my opinion, the near-term pop in BTC based upon, or dip, depending upon Elon's tweet of the day, is, hopefully the evolution that it's going to have on the overall Bitcoin market structure. I think, he's certainly addressing something that's top of mind by both our corporate treasury clients as well as some of our largest institutional investors, and that is the broader power consumption that is required for something that's proof of work like Bitcoin. And so I do think obviously the tweeting itself has a way of causing volatility one way or the other, but at the end of the day, I think the message, was resoundingly positive. I think it forced the industry at large to address a concern that was kind of living beneath the surface. And hopefully it'll be, medium to long term, very positive for both BTC as well as the broader acceptance of crypto.
Yeah, I agree. Let's dig in a little bit to the recent borrowing and lending trends. I saw a stat that 1% of all circulating Bitcoin supply has now been wrapped into WBTC and brought into the Ethereum ecosystem. What is the overall trend here that we're seeing for lending and borrowing in the space?
Absolutely. So first and foremost, I think, WBTC in, kind of the expansion of its use case is extremely exciting. And it's been really, really fun to watch the lending ecosystem evolve over the course of the past year. I think certainly seeing, both WBTC and the amount of it that's minted pick up, as well as the amount of assets that are being stored on some of these DeFi protocols increase over time, shows that the chase for yield is likely only in its early stages. I think, it's been extremely exciting to observe, even some of our largest institutional clients begin to take part in ask more and more questions about how they can best attain yield and how they can achieve, the opportunity to stake on some of these different DeFi platforms.
Yeah, so when we are taking a look at the cost of yield, and these assets being used for collateral and staking needs, what is that risk-adjusted yield in crypto?
Absolutely. And I think that this is something, more specifically that has evolved over time. I think when we talk to some of our largest institutional clients, at first there's genuine excitement in a generally low yield environment in traditional finance to see, yields in upwards of 10 to 15 to 20%. But I think naturally the next question is, what is the true cost of that yield? And what's essentially the best opportunity for me in terms of like achieving a risk adjusted return? And so, for everyone, it really depends upon, what their risk tolerance and what their risk preference is. I think the questions that we've seen coming in from some of our larger institutional clients, as the institutions that are coming in become more and more traditional in nature, the questions become more and more akin to, what I saw in lots of years in traditional finance. And people are questioning, like I said, is this yield too good to be true? Who is the end borrower of this? And, does it make sense for me to chase 15 to 20% yield if the end user is unknown, or should I be electing for something in a 5 to 12% range where I'm only lending to a broader institution, or I know that my assets are being over collateralized? And so I think at the end of the day, it's really unique and fascinating that there are so many different options out there. Like any investment, I think it really depends upon, what am I ultimately trying to achieve? Am I optimizing for yield? Or am I optimizing for safe yield? And so I think it really is a question of whom the investor is at the end of the day. But the fact that there is that optionality that's existent in the market, and even on the conservative end, that the rates are substantially higher than what you would find in traditional finance, I think it's exciting, and hopefully it's the beginning of kind of the new era in yield.
Yeah, fantastic. As you say, optionality is something that we didn't have before. And, as the space continues to evolve, I think we'll continue to see kind of weird and wonderful things emerge. Ben, it's been such a pleasure to chat with you. I always ask my RFQ guests, end of summer, so the end of Q3, what's the Bitcoin price going to be?
It's an excellent question. So the end of summer, I mean, if we look at, some of the things that we've seen here at FalconX, whether it be, the basis trade, if we look out beyond July, we're starting to see some extremely bullish signs, right? We're seeing things begin to trade at a substantial premium again, if we look out beyond that July expiration. I think one of the other things that we've seen notably on the desk is, in spite of the recent consolidation in pricing, which I do believe is healthy in the medium to long term, we haven't seen very many people inquiring or actively taking short positions in the market. And so I think what we're seeing more than anything else is people taking a step back, identifying where there's the best opportunity for alpha, and repositioning themselves for what will likely be the next run up. And like I said, I think we're certainly seeing that in both the BTC basis curve when we look out beyond July, as well as the fact that, you know, even over the course of the past 3 or 4 days, we've seen some of our largest clients take, you know, very, very large positions on the long side of things. So that all said, needless to say, I'm bullish. And I would like to say that we likely retrace back to, let's call it 60,000 by the end of Q3.
60,000 by the end of Q3. Thank you for humoring me, Ben. Can't even get it out. It was a pleasure to have you, and we'll have you back in a few weeks' time and check to see if your price prediction was correct.
Perfect. Fingers crossed, and thanks again.